Knowledge of self, knowledge of science, 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 of science.
Guys, we are live. Hello. How are we doing? All right. We're all good. We're all live, up and running. Right. Welcome to episode 30 of the Trader Matt podcast. If you are new here, basically, I like to have chats with traders that are real traders. And from an intellectual curiosity point of view, I'd like to see what they do. I like to see how they trade. I like to see their processes, how they got there as well. And tonight's guest is Osbrah. He's a day trader. He's also a streamer. He trades on stream as well, which takes a lot of balls, which I'm very interested in getting into. And he's part of Chroma Trading, which is a pack of killers from what I've seen. And I'm probably going to speak to some more people from the group at some point. This stream is partnered with Hyro Trader, it's a crypto prop firm. So if you're looking to scale up your capital to trade with, then you can look at Hyro Trader. You can get 10% off of all challenge fees by using the code TraderMatt. And you will get a refund when you pass and get to the funded stage. So I think that is everything. And I am going to introduce Osbrah now and unmute you, mate. Hello, welcome. Yeah, here we go. Thanks for coming on, man.
Thank you so much for having me here. Hello everyone also. And yeah, that's a real pleasure. It's also my first time. I mean, I am a guest and like a first time auditor of your podcast, which is great.
Yeah, thanks, man. Well, we're going to get straight into it. Actually, we're just going to go straight in, dive right in. And so chapter 1 is teach me how you trade. So I like to make connections with people as well as just like learning how they trade. But I have chapter
Sure.
1 basically to understand your process. And as a bit of a chart addict and someone who has a lot of passion for trading, I get quite interested in how people just perceive the market and in how they enter. Not necessarily to learn, but just kind of out of like interest. So I'm going to share your screen now. I've got that up on screen. Are you able
Yep.
to run us through basically, if you're looking at the chart, you come to the chart in the morning or whatever time of day you get to it, what you look at, how you look at it, and then how you sort of find a trade and enter one.
Sure. So I am a price action trader, so nothing extremely fancy. I trade mostly on H4, H1. So I know for some people it can get quite boring because obviously the trade frequency is not as important as if you were trading on the M1 if you are basically doing scalping. So basically my process is quite simple. I always try to look for relevant value area. So I pull my fixed range volume profile. I don't use automatic tools. So basically it goes like this. I'm looking for a significant move that happened on the chart. And obviously we had this week here that led afterwards to the local bottom, the current local bottom. It would be nice to know if you think this is the bottom of the cycle or not. I think yes, personally, but basically, I just pull a volume profile first, and that will be the um, the fundamentals of my technical analysis. So we have the value area here, right, with the extremities, which are the value area high and the value area low. So I will always look for liquidity grabs, like we had here, for example. As you can see, it respected quite well the value area and the value area high, especially here. We had the bearish retest here. Then we had the deviation, right? We got all the liquidity swept, taken. We also potentially built a bull trap. Here you see we had a retest, so that was quite clean. And here was the final one. So basically, after this deviation, if you, for example, if you are looking for short, and that was my case because I am macro bearish, so I'm bearish on risk on assets. So if you enter the short after this deviation, for example, you are quite safe having your stop loss either here or here. It hasn't been grabbed afterwards. So this is what I'm looking at. Also, I will add some very basic um, price action / ICT components to my trading. I will look for supply and demand zones. You might have heard about them. For example, we have a significant supply here. We have a significant demand right here. We have another one right here. And that's going to be interesting because I will be able to tell you what I'm looking for the next long opportunity. So here, I will be looking for something like this for a short, for example. So retest of the supply zone that we have here. And for a long, I will simply look for a sweep of the value area low, a tag of the demand, and then a bounce. Hopefully we can get a bounce from here. Otherwise, then I think we're going for new lows. So hopefully it doesn't happen. So Mm, I would say this is the core of my technical analysis. Of course, I also like to add some tools like Fibonacci levels that I love. I really do love Fibonacci levels. I'm mostly using the golden pocket and the optimal trade entry. So the golden pocket is the level that you have right here, and the optimal trade entry is the level that you have right here. I don't know if it's good to go into the details, but if people would like to try themselves and they still don't know about it, but I'm sure the majority of the people listening to you are well educated. But basically, the golden pocket is located between 0.618 and 0.65, and the OT is located between 0.71 and 0.79. But that's not the only things that I do use. I also like to use order flow. I know it looks fancy and complicated, but trust me, it's not. It looks like a volume profile here, but this is our TPO profile, what we call the time price opportunity. It's very similar, but the main difference is that the volume profile is based on volume and the TPO is based on time, how much time the price spent at certain areas, right? And it tells you where the fair value is. So I will look basically at the same things: sweep of value area low, sweep of value area high, bounce off the point of control, the basics. But as you can see, we have a few additional things here, what we call the TPOC. It's basically a TPO point of control here and here. And these ones are naked. So these are what we call naked POCs. What is a naked point of control? It's also very, very simple. It's a point of control that hasn't been retested since we exited the value area. Quick example, here we had a value area, we had the point of control of the session, and since the session has ended, we didn't retest the POC, so what we call the naked point of control. Until it gets retested, we call it naked, right? And I tend to use these levels as potential reversal areas. And I like to see if there is confluence with other tools that I use in my trading. Here, that's a perfect example because we have the supply that we mentioned just before, plus the naked POC. I will just go back here to show you. It is the supply that I was talking about right here, around 65, right? So we have confluence. This is the kind of stuff that I do like, right? And for my execution, because that's the analytical part, but for the execution, I will look at CVD. So here, just because it's not written on the chart, but we have the price, we have the CVD for perpetuals, and we have the CVD for spot here. And at the bottom panel is the open interest. So I like to use CVD to see if a move is healthy and if a move is really strong. Basically, before I long, I like to see spot participation, so spot buyers supporting a movement, not just a move driven by perps only, because most of the time it doesn't end well at all. When you have experience, you know what I'm talking about. And I'm also looking for divergences, exhaustion, absorption, etc. And last but not least, because it's a key component of order flow, I like to use the footprint here that you can see here to see where the excess is and if we trapped sellers or buyers. Very, very simple. I don't know if I'm going to be able to give you an example, but here, let's say it was our top. I don't know if it was the exact top, but let's assume it was. What I will be looking for is if we had excess at the top of the move. So basically, you see the bubbles here. The white bubbles are selling volume, and the blue ones that we have here, for example, are buying volume. So what I like to see when we have a strong move to the upside or a weak or whatever, I want to see a lot of buying at the top of the candle with ideally the point of control. So this is the red the red area that you have in the candle. I like to see if you had excess of buying volume at the top of a candle without the price continuing to go up. And this is where I will be thinking, okay, we trapped top blasters here. The price will most likely reverse and liquidate them after we trap them. Same for sellers. Here we have a good example. It's not the best example, but I think it's quite relevant still. We had the move down. So that was almost the bottom. I think that was the bottom, actually. Yeah, that was the bottom. Was selling volume and it was at the very top of the move. So this is where I believe, okay, sellers got trapped and most likely we're going to squeeze them. If you look at what happened next, we had that move to the upside and potentially these guys got forced to close. How to know if they got forced to close? Then you will be looking back at your open interest and see if you had positions being closed, because open interest very quickly is the sum of orders being opened or being closed. It doesn't tell you if it's specifically longs or short being opened, is the sum of the contracts, right? What you can guess when you look at the CVD here on the perp side, if you see a lot of buyers plus the open interest going up, you can guess it's mostly longs contract being opened and vice versa. Sorry for the long explanation. Maybe too much stuff.
No, man, that's perfect. That's exactly what we want.
Very simple, and this is basically everything that I do use.
Yeah, man, that's perfect. So let me rewind it a little bit. So your first question was, do I think that's
Sure.
the bottom? No, I don't think it's the bottom. I think we're going to go a little bit lower. But if you
Okay.
can go back to the trading view screen, the
Sure.
question I had to ask, if you could put the was it the volume or was it the with the point of control and everything?
Volume
Was it the
profile?
volume node?
Yes. You have the volume
Yeah,
profile
that's the
here.
one. Yeah. So obviously it's basically you're looking at a range and you're looking at the most
Yep.
important part of the range. So you said at the top you'll see a deviation, then it'll come back down, and then it retraced to the resistance and made a new low. So how would you enter? Are you looking at entering on a limit order when it like retests the range high after dropping back down, or do you enter at market like once it breaks back through? Like how do you get into the trade?
I mostly enter at market. Something interesting here, I will show you how I do execute. So I use the order flow, but if you strictly rely on price action, here you had this move. Let me find my tool. Okay. So you had a low, you had a higher low, and a high, 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 etc. And here what happens? So we had a higher low again here, but we failed to do a higher high. Otherwise, the price would have been somewhere around here. We failed to do the higher high. What happened after? We had a break of structure here with a lower low being formed. And here we had the retest of the value area high just here. So basically that was quite sweaty to be honest, but you can enter market at value area high on the retest of the value area high, have your stop loss above the level here. It was, as I said, you probably would have sweat a lot if you were in that short, but that worked. The high has been protected, and here we formed a new low, and then we had a lower high, and we formed new low, okay, etc., etc. So this is how I enter. I mostly enter with market orders on my trades. I don't enter with a lot of limits, and the reason is simple. I know limits are better because you pay less fees. It's better to stay focused on your plan, etc. But it's my personal opinion. I think since we have um, a new president in the United States, the market is much more volatile. It's a lot more seek and destroy kind of price action with um, truth social posts making the price move one way or another. It has been, how I could say, even worse lately with the conflict in the Middle East and with a post from one side and then the opposite thing from the other side, etc., etc. So I do like to use market orders so I don't, for example, go to bed with limit orders and then wake up after I lost money while sleeping peacefully, right? Or not so peacefully. So yeah, enter market, and this is why the most important part is to wait if you enter market mostly as well to wait for these things right here, the sweeps and the deviation, because this is the strongest confirmation that you can have. Here after this sweep, if you entered, you were safe. If you look here, the price never came back above this high here, so you were most likely safe.
Okay, you seem to enter at market differently to me. So I'm primarily a sort of a breakout trader. I'll wait for, in this instance, I would have waited for the lower low, and then I would have just entered on the close of that candle. But you'll wait for the retrace into an area of interest, and then you'll enter at market, right?
Exactly. Yeah, exactly this. Exactly this. So it could be, as I said, it can be the value area low or the value area high, but it can also be a demand zone. For example, here, if I look on H4, I didn't notice this one. I do it now. We had a nice demand. You see the price went up, and then we had the retest here, and boom, it went up again. What I do like here is that that level led, for example, to a higher high. So we had the high here, we had a higher high here, and another one. It hasn't been properly retested. I don't consider this being a proper retest. However, we do have equal lows here, so liquidity to be grabbed. And I do assume that if the price comes back lower and do retest this level, then that will be a good opportunity for long, because that particular level, so that demand zone, has provided a solid movement after it got retested here. So I hope this will remain a support, because I would like to try a long around these levels.
Okay, and then obviously you've got all of the other stuff you're using as confluence with the the order flow, the
Yes.
CRV, and all this. Um, Are you what screen are you mostly looking at when you're entering? Like, you're using price action first, and then you'll get the confluence from the indicators, and then you'll jump back up to the price action, and then you'll enter. Is that right?
That's a very good question. It's something you said it at the beginning in introduction. I am part of a Chroma trading community, so we are teaching people basically, and we offer one-to-one sessions to people. And this is something that I always repeat to students interested in order flow. Always value price action above everything else. Order flow is another tool at the end of the day, but the most important is price action. So price action first, order flow after. For example, here you see on the TPO profile, we are above the value area low after a sweep here. So you could be asking, it's a good long area, right? Yes, if you strictly rely on the TPO, but if we look here on this chart, then I have no other confidence levels. We are still in a downtrend on low time frame, in my opinion. If we zoom in here, we had this high, right? Then we made lower low, lower high, lower low, lower high. So unless we get the structure inverted, then I don't see any reason to long here until we get to that confluence zone with the value area low, the demand as well, potentially fibs if we check, if we take a few seconds to check the fibs, if we go from the swing low to the swing high. Um, Not necessarily. We have the golden pocket here. We have the 0.5 here. So could work. But I do prefer this level because we have much more confidence than just a value real low on the TPO chart here. Also, TPO is for low time frame, in my opinion. As you can see, the chart is set on M30 here. And here it's on H4. And I tend to believe that the higher the time frame, the more relevant and reliable it is.
Yeah, I agree. So when it gets into your level, let's say you're looking at this on H4, are you
Mhm.
looking for certain confirmation from price action as well that the level's going to hold? Maybe you'll get a deviation of it and then a higher high, for example, or a couple of higher lows and higher highs that kind of signal a bit of strength. Do you have a specific sort of entry criteria, or is it just it's coming into my level and now I'm going to look to market order in?
So for this this long idea, let's imagine we plan to take a long here. As I said, we have these lows right here. So I would like to see first the liquidity being taken. That's the first step. We take the liquidity here. First step. I would like ideally to sweep the value area low as well because people will probably get excited once we get um, the first touch around here inside that demand, and will probably FOMO long. So I want these guys to long here, right? I will make things a bit clearer. I want these guys to long here to FOMO long, and then I want the price to sweep the value area low so we can take them out, and then I will enter on the close. I will switch to H1 and I will be looking for a candle close above the value area low on H1 at least to enter the trade. And I will use the wick that has been formed during the sweep to have my stop loss. So that will be my invalidation, basically. Quite straightforward and simple process.
And then in terms of targets, would you then just be looking to trade that to the other side?
Exactly, absolutely. I see this as a range. I see the value area as a range. So if we do, this is why I tend to believe the move is not done yet and that we're gonna roll over lower. Because according to auction market theory, if we fail to accept above the value area high, right, and then we fail to find support at the point of control, then the next logical level that is left is the value area low. So I think we do rotate from the value area high to the value area low, if nothing acts as support in between. So after we find, if we do find support at value area low, then I will expect the price to at least retest the point of control. The good thing and the interesting thing is that here we can already say we are forming a supply zone supply zone aligned with the POC. So either the price will do something like this. So it's always useful to use the POC as a TP1, right? So that will be your first TP. And if the price, just like here, it failed to bounce on the POC and it's now below. So I think it's going to go to the value area low. Then same process but inverted. If the price goes above the POC and accepts above, then I will believe that the price will go to the value area high, and that will be the TP2. So I just use the basic range trading concept to trade the value area as well, because at the end of the day, the value area is just a range.
Right. Yeah, exactly. And then when you say TP1 and TP2, how do you take those TPs? Is it like 50% or 25%? What do you do?
Most of the time, yeah, if there are two TPs, then it will be 50-50. I would set my TP1 at the POC and exit at value area high. Here it's quite even. Let's say I enter here, then we will have a move like this and then a move like this. So 50-50 is relevant. Of course, if I set my TP1, let's say my entry is here and my TP1 is here, I'm not going to take 50% off. I'm going to take probably 25% and then take another 25% here and then exit here. It will depend how many take profits you have and also where they are located. I would like to, if I TP, let's say I have a profit of 100, then I like to, and I take just two TPs, I like to take 50 on the first one and then the rest on the second one. And if I take three, I like to split 33, 33, 33, for example. I like to even things as much as I can.
Yeah, keep it nice and simple, basically. Um,
Yeah, nice and simple, exactly.
and let's say if you get in at the bottom and then your target is at the top and things are running nicely
Mhm.
and they're looking strength, they're given all the signs that you want. Do you add positions along the way, or you just keep the one from the bottom and then you're just holding for target?
In this scenario, I would not add because this is a ranging environment. I mean, if it plays out and we roll over from VAH to VAL and then from VAL to VAH, then that would be a ranging environment. And then I have no reason to add to my position. However, if I am in the position, I will use the open profile again. Let's say I enter here, right? As we said, entry, and then I change my mind and I'm very convinced we are very, very bullish and we will go much higher. Then if we do flip the value area high, the price do something like this, I may add to my position. I only add when we shift from trending environment to ranging environment, sorry, spoiler, to trending environment. If you have a trending market, so for example, it's going to be very simple again, but let's say you are in an uptrend like this, right? And you want to compound your interest, then you will try to identify, as I said, the demand zones. And when these demand zones are being retested, let's say you have your first entry that's not well made, but you have a first entry here, then you form another demand right here, and the price do retest that demand, then yeah, you can compound and you will have, so as I said, your entry here, you will add to the position here, and so on and so on. And every time you'll have a high or low being formed, then you will add to the position. So plus for add, you will add, and take profits on the way up. This is how you compound. But in a range, it's at least to me, it doesn't make sense to try to compound um, because the risk is if you get a very good entry around here and you add to your position, let's say at the POC, then your entry will be averaged to the upside. You will have a bad entry, and if the price rolls over, as I said, if you set your TP1 here and it goes back to entry and you close break even, or even worse, you let it go to your stop loss, and at the end of the day, you would just lose more money than it was initially planned. So yeah, if you're in a range, at least to me, if I trade in a range, I don't add to the position. If we're in a strong trend, I do.
Yeah, that makes sense. I'm a little bit guilty myself of sometimes adding in ranges because I get very excited thinking, it's broken the mid range and it's going to go to the other side, so I
Yeah,
need to start adding. And then sometimes that gets very bad luck, and I end up round tripping trades that are like 3
yeah.
trades.
I mean, yeah, if you switch, like for now we are on H4, and if you switch to very low time frame and you see the price after sweeping the value low is climbing in an uptrend, then yeah, you can be tempted to add on the way up, or even to add once we flip the POC. It totally makes sense. However, as I said earlier, um, price action the last couple of weeks, the last couple of months have been a bit like seek and destroy, as I said, and you can completely revert a whole move in like 15 minutes, 30 minutes just because of a tweet. And it's not really my cup of tea. As I do prefer to play it safe rather than sorry.
Yeah, it's dog shit at the moment. It's been very difficult. I mean, this type of price action is like very rare, really. I mean, even though we get ranging environments a lot, this is really scrappy, and quite bad. Um, Couple of questions as well on just like your hold time. So, first one, is it just Bitcoin you're trading, or are you trading other coins as well? So, because you said you don't get many positions, and I understand that because I've primarily switched to the H4 timeframe myself, and find myself maybe in like 3-4 positions per month if I'm lucky. And I find that
Okay.
really difficult. Are you is that something that you kind of experience as a trader, or do you look for other things to trade as well whilst you're waiting? You know, if you see this is dog shit, you might look for another coin, for example, on your watch list.
I would say, yeah, if the crypto market is in a bad shape, I built a bit of experience on indices, so on S&P and Nasdaq. But also I've traded gold a lot. And this is, I think it's my personal opinion. I think it's better than BTC for low time frame scalping, etc. So I like to trade, yeah, to trade gold a lot. Um, I think I have more success scalping gold than scalping Bitcoin. I avoid altcoins as much as I can. Sometimes when I see a very strong opportunity, I can find myself trading them, but I do avoid simply my win rate and my trading overall has been better sticking to majors. So as I said, BTC, Ethereum, maybe Solana, S&P, Nasdaq, and gold. And on altcoins, I struggle a bit more because I think you have to think about narratives, what narrative is running hot at the moment. Also, altcoins sometimes when BTC will go up, they will go up even harder. But then when BTC will start to roll over, then they will roll over even faster than BTC. So yeah, I just don't like, and I think when you grow up as a trader, but also as a human being, you get older, you get more mature, you have more responsibilities, maybe more hobbies in life. Then it's adding some unnecessary stress trading these illiquid altcoins. So yeah, I do avoid. I focus, yeah, BTC, BTC, ETH, and yeah, and gold mostly. Indices sometimes, but not as much as BTC or gold, for example. So I would say, yeah, my most traded assets are BTC and gold.
I struggle with gold. I think the price action is typically very clean, and I've been looking at it literally over the past week, since it looks to be bottomed. Um, but for
Yeah.
my style, or just the way I execute, or the way I manage my trades, for some reason I'm just like I've got really bad win rate on it. And like I will get
Okay.
into a good position, and then it might whipsaw me, take me out, and it might do that 2 or 3 times before it does the move. I've historically I've had a very bad time on it. Um, but another question I wanted to ask, as more of a medium time frame trader, um, how long are you typically holding trades for? I mean, obviously it depends, I suppose, on the range. But sort of, do you have an idea of an average hold time, and how do you manage that? Because I've started trading. I used to be a swing trader primarily, like back in when I first started, 2015 to 2022. So for like 7 years, and then I've moved I moved down to the 1 minute time frame when I went full time trading,
Hmm.
and had to do like I just had to be around the charts. Otherwise, you're sitting there doing nothing all week, right? Um, and then as of this year, as just literally as you said, you get more responsibilities in life and um, a lot more going on. So I've had to move more to a higher time frame, and I struggle sometimes. Like I'll wake up in the middle of the night and see if I've got an alert that's been hit, or like I'll wake up first thing in the morning and I'll check my phone to see if there's been an alert or see what's going on in the charts. Do you have anything like that, or are you quite chill?
Um, no, also I do. I have the same habit. Sometimes I can wake up in the middle of the night or very early in the morning and look at the prices, check if some alerts got triggered. But to answer your question about the trading duration, um, for gold, it will be I will just hold the trade through the session, or maybe even for an even shorter amount of time. And for BTC, because you see here on gold, I go when I do trade gold, I go on H1 maximum, and then I mostly trade yeah, between somewhere between M5 and H1. So obviously, the lower the time frame, the faster the trades are. And for BTC, it can go from, yeah, a couple of hours to a few days, basically. I was short. I don't remember exactly where it was, but I think I held for, yeah, a few days because the price did not move over the weekend. So it was, yeah, 3, 4 days, something like that. Same with same taken around. Yeah, I remember the entry. I think it was 173, 172. So it was August 5, and I TP'd 158, and basically 158 got touched on August 8. I see it was 3 days. So yeah, crypto, it will vary from, I would say the minimum is a couple of hours to a few days, and for gold it's a bit faster. But sometimes, and this is when I consider I am lucky. um, let's take an example. But if I would enter here, sometimes movement are really fast, then you can go to your TP, for example, here in just like 1 hour, 2 hours. It happens sometimes, and I consider myself lucky when it happens because I don't have to hold the trade for an extended period of time. But most of the time, it doesn't. It's not that good most of the time. So yeah, can hold for an extended period of time on BTC, unfortunately.
Yeah, I mean, it's a trader's dream, isn't it? When you get into something and then it just moves away from your entry, and then like you're
Home
done
run
and out. Oh,
goes to
amazing.
TP.
Yeah, it's the best feeling, isn't it? Um, the last
Yeah.
question on this section before we move on. When you've got a trade open, like maybe a big trade, or you've got a higher time frame trade on Bitcoin. Um, I think I kind of asked this already, but would you just be happy to ride that until it closed, or if something else sets up elsewhere on a like you just showed near, for example, would you be happy to take that, or would you just like to keep one on at the time?
Very good question, and I have a very good example because it happened earlier today. So I was doing a live stream on Twitch, and I saw this setup. So as you can see, basics as I explained earlier, a resistance, a sweep here, a supply zone. So I took the short around here, and then considering the price was really not moving towards my directions, it was not moving down. We had a small move down, and then if you zoom in, we had that engulfing candle. So it indicated that we had some strength. Plus, because I'm also very interested and I'm very into macroeconomics, geopolitics, and stuff like that. Trump announced yesterday um, capital gains tax cuts, and that's to me a bullish catalyst. Is if we talk a very little bit about economy and politics, then that's a move for the midterms, basically to get more voters during the midterms elections at the end of the year. And that's a bullish catalyst for risk on assets. So when I saw that the price was not rejecting from that resistance, I decided to close and prevent a stupid loss. Um, the initial stop loss was above the high here, and I preferred to close around here slightly above the entry and basically lose almost nothing instead of losing the of going to letting it go to the stop loss. Same goes for profits. If I see a trade going well, being well into profits, and something happens, and it can be, as we said, it can be a tweet, it can be a data being released, anything else. But if I see a catalyst and if I see the price reacting to it, if I see a strong reversal, if I am short, or if I see a strong dump when I am long, then yeah, I can anticipate and I can react, sorry, and close earlier and close early, even if it doesn't go to TP. Before, as I said, I always prefer to be safe than sorry. Always, always, always. So I want to secure minimal loss or secure a bit of profits instead of taking the full loss or taking no profits at all.
Yeah, it's a fine art, isn't it? Because I did the same thing. Like you see something, I suppose when you're looking at the price action, you've got enough experience and you've entered and you've taken enough reps. You kind of know, don't you, when it's going to
Yeah.
go? You kind of know when it's going in your favor. So you're quite good at like cutting. If you're like, right, it should go here, and it's not. Okay, I'm out. You're quite good at managing that, are you?
Yeah, here, imagine it's always easier in hindsight, of course, but imagine you were short on Nasdaq from here. And it would have made sense because we had these equal highs, we had the sweep here, and then price closed below the level. So it made a lot of sense to short here. And you see this. So if you trade ICT concept, you know what a FVG is. So if you look at this candle, you had an FVG right here. And what happened here? We filled that imbalance, we filled the gap, and then the price instantly reacted. We had an engulfing candle here, right? It closed above the previous candle high. So you know it's quite bullish, and see what happened after. I know it's easy in hindsight, but you know that if you see a reaction here, some strong reaction like this with a wick telling you that people stepped in here, then maybe it's a good idea to close your short early instead of letting it go back to entry.
Yeah, I one of the problems I've had as a trader, which kind of extends over from my life, is greed. And in such a scenario like that, where I've had enough experience of maybe like cutting the trade and being incorrect, and then it goes on, and then I've missed out on a bunch of profits. And then when those things happen next, I'm like I don't know if you can see my screen. I'm just going to move to my screen. Um,
Yes.
like there was this low. Oops, let me just get this back up because you can't see on the stream. Let me get on M30. Where was it? This is Bitcoin, yeah. Where is it? Oh yeah, down here. So I was short from up here, and then you've got, well, if you've got this low down here, and it takes it out, and then it retraces and tries to take it out again, and then it retraces twice, and then comes down to put that third push in. And at that point, you're looking at it and going, right, this, if it's going to go, it should be going at this point, but it doesn't, reverses. And I've got more into, I'm going to trail my stop above there when we're down here rather than taking profits in case it comes up and then goes down like that, right? That's a problem that I've struggled with for quite some time now. Probably a couple of years. I got really good at like seeing these signs and then like cutting at that point. Have you ever had anything like, or maybe a complete opposite of that, where you're maybe too conservative? Do you have any like issues with your trading in situations like that? Because it is a skill to be able to cut things early, right? Because you've got all these emotions, especially if something's moving greatly in your favor. To cut that early is quite difficult. And then likewise, if you're in your situation where you just showed, if it's not going in your direction and it starts trading against you, you've got to cut that early. Whereas a lot of people go, I'm going to hope this is going to come back inside. All my entry criteria was correct, so I'm just going to hold on. Did you have any like struggles similar to that?
Yeah, here I think if I was in such a trade, I would have been stopped out break even and round trip the profits. However, if someone is willing to work on this, I don't know if you're streaming my chart now,
Yeah,
my
we're back
chart
on your chart.
again. But if we go here, I will just try to find where it was. I think it was here, right? Yeah, it was here.
That's it.
You had a way to prevent, if you entered at the bottom or somewhere around the bottom, you had a way to prevent round tripping. Here, if we talk a bit of price action, basic price action concept, you had a break of structure with a higher high being formed, right? And then you see here that was a bad signal because you had a supply, and I think we were in a downtrend. Yeah, we're in a downtrend. You had a supply. You see that the price, like we had a high here, we took the high, we retested the supply, and then we had a sharp move to the downside. That was the first signal. Once again, I know guys, it's always easier in hindsight, but you had this first signal. The second one, here you had a demand zone, right? And you see we had no reaction touching the demand zone and price slice through. So here, potentially it would have been a good idea to either, yeah, to move, basically to move your stop in profits around this level or slightly below it, because if the price did not react here, then it's always easy to say, but maybe I would have thought, okay, it doesn't react, it's going to go lower and potentially back to the long entry that you may have had just here. And then what happened here? Well, unfortunately, that's sometimes crypto and yeah, the chop that it does, going down like this and then erasing the wall move down in just two candles. You gotta get used to it if you're into crypto, I guess.
Yeah.
Yeah. Here are like a few tools to prevent doing such things and round tripping everything. Look for supply and demand zones.
Yeah, just mark it as the price evolves, basically. Yeah, you got to be behind the screen, haven't you? Um, I keep saying last question, but more stuff keeps coming in my brain. When you enter a trade, are you going it because obviously you're doing it on like a higher time frame on crypto? Do you enter full clip, like you're happy with what you're seeing, so you go full clip, or do you scale into positions as you get more confirmation?
Usually I go full clip, and sometimes if I'm not super confident, I'm not gonna. Let's say my position is 1 BTC. If I'm not extremely confident, I will go with 0.5, 0.6 BTC maybe, and I will add if I see some reaction, I will add until I get to 1 BTC, but only if we stay around the entry. Let's say we tag the entry, I'm not super confident, I go with 0.5 BTC, and then in just a few seconds we have a move up that is super strong, a price shoot to the upside, then I'm not gonna be like, oh, I have to get my full position, I'm gonna add here. Because once again, as I said before, your entry will be bad, your average entry will be bad, and you will take a trade. You don't want to, at least personally, I don't want to go for anything lower than 2.5, 3 hour trades. So if I do average my position and I get a risk reward that goes below 2, that would be very bad. It's also something that you have to tweak with experience. I don't have a crazy win rate. I'm definitely not the most impressive if we talk about win rate ratio. So I have to, because it's my flow. I have to look for high risk reward ratio trades. Otherwise, I could not be profitable with 40% win rate.
Yeah, yeah. My win rate is about the same, sort of 35 to 40% actually. So yeah, I think that's always when someone tells me that, I'm like, if you're a profitable trader because you've got like a low win rate, but get the decent profit factor is the way, right? Um,
Yeah,
Again, I've got two more questions. Two more questions, and I'm going to move on. I promise.
sure. Let's
First
go.
one, what session are you mostly trading in? And the second question, what are you trading on? Are you trading personal account? Are you trading prop? Are you what are you yeah, what are you trading with?
First about the session, US session, no surprise. I think London session is better if you trade FX, if you trade certain pairs on the forex market. I think for crypto and major indices like S&P and Nasdaq, then obviously the US session is the best. It has the most volume, and you want to avoid illiquid environments as much as you can. Regarding the second question, it will depend on the context, the global context. If we have um, like a price action that I'm very not comfortable with, that put me in a position to have a lot of stop losses, then I will switch to prop firms. If I see conditions being easy, sometimes I find myself being a complete degen. I load a portfolio on an exchange and I go big with leverage and stuff because the conditions are quite easy. I try to make a lot. It's not a good thing to say, right? But don't get it out of context. But I try to make a lot of profits quick and then get the money out and then go back to prop firms when the context goes back to being in a bad mode because I want to avoid being rude, so stay professional. But yeah, if it's too choppy, then I prefer to spend I don't know. I know that you're sponsored by Iro, so I'm not gonna name any other firms or prices. I respect that, uh, but I prefer to spend. I think the prices are the same anyway. A 500 on a 100K account, and try one, two, three times maybe until I get a payout. But usually on a 100K account, I get payouts around 6, 7, up to 10K max, something like that. So I prefer to lose, yeah, between 500 and 1.5K rather than putting, I don't know, 10, 15, 20K on a few trades on a personal account and losing it all. Because at the end of the day, I could do the same with prop firms, but without risking my own capital. So just analyze your trading performance depending on the context and the environment that we do have. If it doesn't work, I understand it can be frustrating to sit back for 3 weeks, a month, maybe even 2 months, and not trade at all. So if you feel that urge to trade, and at the end of the day, I think we are all addicted, right? We cannot spend 2 months away from the charts. So just go with prop firms. And if you cannot afford to spend 500 on let's say an IRO trader 100K account, losing it and trying again and trying again and trying again, and of course you just reduce your target and go with a 5K account, 10K account, just to practice, just to refine your strategy, and eventually making a small payout. But even a small payout is still a profit, and profit is better than nothing, right?
Yeah, I think that's a really good answer, mate. I think with trading, especially these days, there are so many ways that you can trade. Whereas like 10 years ago, it was very, very different. But I think that's smart. Like, especially if you've got itchy trigger fingers in market conditions like we've got now, it makes more sense to, like you said, maybe buy a 50K account, a 20K account, and just play around with that rather than blowing your load like of your personal account. And yeah, jumping onto a
Absolutely.
prop firm. 10% off challenge fees at Hyro Trader using the code Trader Matt, just FYI. But yeah, that's kind of how I like to do things as well. I like to have prop firm as kind of like the monthly cash flow and then build a personal account. And when the conditions are good, which I'm looking forward to the bull market, especially loading up a personal account and degenning like a bit of personal capital and then getting quick gains. And then I do exactly what you do, but I don't take all of the profits. I take about 75% because I know I can then just go, right, let's add that to the next trade. And then you lose the next trade. It's always good to pay yourself, right?
Yeah, yeah, exactly. And yeah, switch to from prop firm to personal account, as you said, and as I said before, when the conditions are easier and when you feel comfortable with the market. Obviously, because I think personally that prop firms are great, but it's less flexible than your personal account. If you want to hold the trade with leverage on your personal account for 2 weeks, you can. on a prop firm, and I think it's the same for all the prop firms, right? You have swap fees, you have commissions, etc. It's and you have to take the drawdown into consideration. That's quite difficult. So I think it's good to have these two offers, and now prop firms are well anchored in the industry, and a lot of people say prop firms are a scam, but I think it's a very good edge, especially when you have the conditions that we had the last couple weeks. If I talk about personal experience, in April I had quite some bad performance. I was not really happy at all because I was overconfident, and I ended up losing quite a lot. So I wanted to get my confidence back, because when you end up a month in the negative and you have a very bad performance, obviously you take a hit in your ego, in your confidence. So I wanted to build that back. So I switched to prop firms, tweaked things a bit, and then funded 300K, got payouts, made a little bit above 10K, but for a month it's great, right? I think in this space, 10K is not impressive anymore, but you have to stay real in the real world. 10K in a month is huge. So I was quite happy. It gave me confidence again. I made money without risking my own capital. Like, the return is crazy when you think about it. You spend, and it's not an advertisement for prop firms, by the way, guys, this podcast, right? But you spend 500, you can make 10K. The risk reward is crazy. We're talking about like 20R, right? At the end of the day. So I think I don't, it had nothing to do with the initial question, but yeah, I think prop firms are a good edge.
No, it's all good, man. Yeah, I think I agree. I think as a trader, you should do whatever makes sense to you. And I think 10K is a very large amount of money. And I think one of the problems is we get desensitized to profits
Yeah.
in when you come on the social media, because everyone's larping and everyone's trying to up each other. And 10K, yeah, that is a lot of money. That'll pay my mortgage for a year, to be honest. So, like,
Yeah,
I think if
absolutely.
you look at it in terms, I say to people, even if you can go make an extra 3, 4, 500 quid a month or dollars a month or whatever, on top of your lifestyle, that probably goes quite a long way. It doesn't sound really impressive if you come online and say, "Oh, I got a $500 payout this month," but that might actually give you like a massive excess at the end of each month to like go and do more things with, even 500, $1,000, whatever. But yeah, everyone's kind of desensitized to it. Um, Right, I'm
Yeah.
going to move on finally to chapter two. I'm aware of time. I know we want to keep this around about an hour or so, but this chapter it is the trader lifestyle and background. So basically, just a little bit more about you, mate. How long have you been trading, and how did you learn? Like, did you go for a mentorship or anything? Did you do it off your own back? Did you just spend hours and hours like obsessing over the charts? Like, what's your background with trading?
Unfortunately, I learned losing by losing and trying again. I didn't go through a mentorship or through um, educational paid groups and stuff. I did everything by myself, but obviously it costed me a bit of money, because when you start trading, you cannot be good. It's like when you try to ride a bike for the first time, you will fall one, two, three times. You will scratch yourself a bit. That was quite the same. So yeah, try and repeat, basically. I've been trading for a bit more than 6 years. Started around, I mean, I started to invest very early, because I come from an institutional background. I have an institutional background. I worked as a banker, a retail banker, then a wealth manager, corporate banking. So I got very, I mean, I was in front of people making a lot of money investing. So this is how I got interested. I bought my first Bitcoin at the end of 2015, but it was spot, nothing to do with trading. I think investing in trading are very different things. This is why I like to dissociate both, because you can be a good investor and a very, very bad trader, right? Trading is very, very difficult compared to investing. So I started with investment, and then with with the start of the COVID, working from home and stuff, and everyone there was a mania online, but also around me, my friends, my colleagues were trading. I had colleagues coming to me and be like, "Hey, look, I shorted this, I longed this." And I was like, "What are you talking about, guys?" And it was inside trading on top of that, so very very bad. Don't be like that. And
That happens
so I got
way
interested.
more than anyone like wants to admit. That happens all the time.
Yeah, 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 absolutely. So I started to be interested, and eventually, out of boredom, then I started to trade, to do active trading. Yeah, at the beginning it was great, obviously because the conditions were super easy, and then not so great, losing money, more money being liquidated, partially liquidated, starting again, losing money, feeling depressed, and then I told myself, it looks like gambling. It just looks like gambling. Sometimes I make a lot of money, but I end up losing it all. And then I will just add more money and I will lose again. And it's like, yeah, and addicted to like a person being addicted to gambling. And I don't want that. So I asked myself, do I want this to be a stupid addiction, or do I want this to be a real job? And if I want this to be a job, I have to think about it uh, in a professional way. I have to approach trading as a true job, as true study much more, watch a lot of YouTube videos. That's the good thing about the industry. There are a lot of stuff um, we can complain about, in my opinion, a lot of bad stuff. But one of the positives is that you have a lot of free content online. You don't have to pay for anything. You can find very good and reliable content online for free and study on your own. Obviously, you also have mentorship programs. And I think at the end of the day, it's up to you if you prefer to have a shortcut and pay someone to teach you. Obviously, it's going to go faster. You will avoid doing mistakes, etc. But it will cost you some money. It's like if you want to practice guitar, then you can try on your own. It will take ages, or unless you're a genius. And if you pay to have a teacher, someone to teach you guitar, then yeah, it will cost you money, but I think you will learn faster, right? It just depends what you can afford to do and what you want to do. But yeah, I learned on my own. And then I grew a community. I started to also grow online, to grow my brand online and connect with people, learn from other people, from other traders, learn from them. And this is at the end of the day how I ended up where I am right now. When I say where I am, I'm talking about my strategy, my system, etc. And yeah, so I preferred to go that route. Maybe it was because of the ego, and I thought I didn't need anyone to teach me something I thought I knew about. But it was probably a mistake. And for some people, if you can afford to pay $50 or $100 a month to learn faster, it may be better than doing like I did and spend not spend but losing thousands being liquidated.
Yeah, I had a similar thing. I kind of learned from a website, readthemarket.com, right at the beginning of my trading journey, and I just ran with that. It made the most sense. It was all about supply and demand, which just kind of resonated with me. And yeah, I think same thing. Like I would be completely lost if I hadn't have learned from someone else. Um,
Yeah.
so how long have you been sort of full-time trading now then? So because you had a job during COVID and then you started picking up trading. How long did it
Yes.
take before you were able to get out of that job and start doing this full time?
Around 2 years, I think. And it's not necessarily because I made a lot of money. It was obviously because I started to see things clicking for me, but also because I spent more time at the office when we got back to the office. I spent more time looking at the charts and trading than doing my job. So at some point I was like, okay, let's move on and quit and resign, then focus on myself. I was much younger, of course. I was around 20, 24, 25. So it's easier to take risk when you're younger. So I was like, if it's not now, it's never gonna happen. So let's try. And since then, thankfully, I'm grateful for that. I never had to go back to the office. So that's good.
Yeah, man, you sound like you've got a very good head on your shoulders, and from what I've seen, you know what you're doing, which is great. What does your kind of day look like now then? So you're trading the the New York session mostly. Like you get up, do you have any specific routines and habits? Because obviously, if you're trading, and obviously the pressure of trading live streaming as well, are you doing anything in your day to make sure that you're mentally prepared for that? Your emotions are all balanced. Or you've got any like habits or anything you do?
Yeah, I try to wake up around 9, do my skincare, then I have two egg muffins. No, I'm kidding, obviously. Um, no, as a routine, I like to map out the levels in the morning after breakfast. Identify the value area high, the value area low, what happened during the previous session, see where the liquidity could be. And also, I try to have a bias. So, am I bearish today? Am I bullish, depending on the technicals, but also on the macro, on the data, etc. So, obviously, if I feel more bullish, then I will try to find good long levels. If I am bearish, I will mostly focus on shorts. I think that's important to have a bias every day. This is what we do in Chroma, for example. We have a daily bias channel, and um, within the team, we share our daily bias, and we try to explain why, and then we have a bias for the day. Um, then yeah, I do trade during the US session. Uh, what happens happens. So if I have the if I'm lucky enough to get an opportunity to take a trade, even better if it's live, as I like to take live trades. Lately, it didn't happen a lot because of the market conditions. But yeah, I try to get in a trade during the US session, and if it doesn't happen, I wait for the next day, basically, and I try to focus on something else. I am partnered and working with other businesses with a firm. I work in the Discord, so I don't have to. I don't only have the charts. Thankfully, I can focus on other stuff. I can prepare educational content. I can prepare videos. I can work on visuals as well for the firms I work with. And then yeah, like also I'm a nerd, so I like to play some video games. I study Japanese as well. We'll talk about this a bit later, but I do study Japanese. I have a few lessons every week. I try to go to the gym, even though lately I skipped a lot, but I try to go to the gym or at least go for a walk during the day. Obviously, to maintain physical activity, but also to refresh the mindset and to get some fresh air, especially since it's the heat wave in France still, very important. And yeah, that's pretty much it. I have a very simple life. I used to chase luxury stuff when I was younger and flex these things a lot, but now it really doesn't matter at all. And yeah, I'm not proud about it, so I try to keep a very simple lifestyle.
I think I think everyone goes through that from people I've spoken to and myself as well. You get that kind of first bit of success and you think, right, that's it. This is only going up forever now. And I'm the fucking man. And I'm going to go and buy this watch
Yeah.
and I'm going to get this car and I'm going to let everyone know I've got money. And then you get a little bit of humbling at some point, and then you kind of go, maybe I shouldn't do that next time. It's like, when you're in a trade and then you're posting how much you're up and you post a screenshot and then that's when everything reverses. It kind of something that happens a lot in life as well, I find, when you're flashing things. So it's a good thing to but I think a necessary thing that everyone goes through, like to get that humbling.
Yeah,
Um
absolutely. Yeah.
I've got loads more I can ask, man. But we've hit that hour mark. Have you got to shoot off?
No, I can stay a bit longer. There is no issue.
Okay,
It's
cool.
fine,
Yeah,
completely fine.
because I know PSG are playing. I don't know if you're a football fan, but I know they're playing soon, aren't they?
Yeah, I am a football fan. Like, I mean, I don't know if you
Yeah,
can
I
see.
see it. Yeah, I
I
think
see,
they're gonna.
obviously support Paris.
Yeah, I think they're gonna win tonight. I don't think Villa are very strong.
Hopefully.
Yeah,
Yeah,
yeah.
hopefully they will. But yeah, no, just the only constraint is I have to leave in max 30 minutes. Otherwise, my rabbit is not gonna eat tonight because I have to buy some
Okay.
food. But yeah, I think 30 minutes is good. Is pretty good.
Okay, right. I'll tell you what, I'm going to skip it on to the next chapter and then we'll keep it sort of
Sure.
10, 15 minutes tops. So, chapter 3, as I said, I've called it live trading because you're a live trader, you stream online. And this is something which I've always had a goal to do myself. I've been back on social media for about 2 years and I've got my son, I've got a family, and a lot of my life is very chaotic and not sort of geared towards trading, especially live stream trading. But I'm slowly getting into it now, and it's something that you do, and you do it successfully. And I just want to know how it kind of like how you got set up with it, how like what lessons particularly you've learned from it in order to maintain success with it. And you kind of touched upon something a minute ago where you'd said, sometimes there aren't trades and you just come back the next day, you don't take anything, you come back the next day. Whereas, with your and certainly when I've been trading live streams before, there's kind of a performative element to it where you want to make sure that people will come in and getting the trades and seeing trades, but also the other side of it is you need to show the discipline, right, to people that you don't take a trade all the time, even if you're in front of people. You like nothing's there, so I'm not going to trade. So what kind of lessons that you've learned from it and how you got into it, and yeah, just let's start with that.
Yep. So I got first into streaming. It had nothing to do with trading. I was playing WoW, World of Warcraft, if you know the game, at a high
Leroy
level.
Jenkins, yeah, I know it.
Yeah, exactly this. Yeah. So at a high level, and at some point, I participated to competition organized, sponsored by Blizzard. So Blizzard is the studio developing the game. And so I started to stream. I was like, oh, that's a great opportunity. So let's stream. And people like to watch high-rated competitive players. So maybe I have a shot and I can uh, start streaming and get popular because I'm good at the game. This is how I started. Got a few, like a small amount of viewers, but this is how I got used to, setting up the stream, interacting with people, getting used to it. Because at the end of the day, you're talking in front of a screen, in front of a webcam, reading a chat, and sometimes, especially when you start, you have 5 viewers, 10 viewers, so you don't have a lot of interactions going on, and you have to find ways to keep people entertaining. Otherwise, the 10 people will go somewhere else, and you will end up with 3 people, and it's going to be even worse. So this is how I got used to it. And then when I started to grow my community online around trading, I was streaming a lot in Discord. I found it more comfortable because I don't know, it felt like more intimate, like a comfort zone. So I started to stream a lot on Discord, and then I got even more confident, and I started to stream on Twitch eventually to reach more people and to grow, but also to connect with more people, and that has been a great decision so far. I have people that are not in the Discord that I don't interact with on X, but I always see them joining the streams on Twitch. They interact a lot. We have fun together, so that's a good thing to do. It doesn't take a lot of time. I just stream on Twitch 1 hour, 3 times a week, so 3 hours in total. And yeah, the most important is to connect and build a relationship with your audience because, as we said, sometimes the market is going to be boring. Nothing will happen. The price will literally start at one price, and end up at the same price at the end of the stream. So nothing happens, but you still have to entertain people watching you because they come here for you. They could watch another stream about Counter Strikes or Call of Duty or whatever, something more fun, but they are here for you. So you have to do the efforts, even though the market is boring. You have to keep doing the efforts to interact with them, uh, to be uh, maybe not to be super excited about what's happening on the screen, but to be excited to be with your audience, to spend a moment with your audience. So if you cannot uh, have excitement thanks to the chart, then find it by interacting with people and talk about various topics. Sometimes we talk about politics, sometimes we talk about anime, games, or whatever. It depends. When the charts are boring, sometimes we can definitely talk about anything, and I think that's important to build that connection with your viewers.
And how long have you been doing it for now?
18 months, maybe. Seriously, I mean, because my first stream I started 5 years ago, but to do it regularly with a schedule and so on, then well, yeah, probably 18 months ago.
And how did it go? Like the first 6 months, when did you start seeing some traction with it?
The first few months were difficult, I would say, because it takes a lot of time to grow your audience and to see small numbers. You see 5, 7 people, 10, 15, then it's the same for 2, 3 months. It can be demotivating, right? You can feel a bit depressed and like I'm lacking, I'm not growing, people are not interested, I'm boring maybe, stuff like that. And you see some other streamers having 200, 300 viewers. So yeah, you may feel demotivated, but you have to keep it up because every time I talked with someone, for example, if you look at Folis, who is the boss of Chroma, um, he's also a streamer, he's doing great. And I talked to him about that probably a year ago or something, and he told me he kept streaming for like a year with little amount of viewers, almost no people here, and you have to keep it up. You have to keep grinding basically. um Also, it costs you money because at the end of the day you have to buy a webcam, and then if you want to grow you have to upgrade your gear to buy an even better webcam, a good microphone, maybe to build a setup behind you, to have the good light and stuff. So it's an investment, and to see you have no return, you have no subs, you have no sponsors, nothing. Yeah, you can feel demotivated and depressed, but you have to keep it up. And if you see the slightest growth, then take it, because it's just like you said about the PNL and stuff. um you have to be aware that if you have 10 viewers, then you're doing better than 90% of people. Because on Twitch, you only see the big guys having a lot of success. But I don't know about the stats exactly, but I saw that at moments ago. I think it's 95% of the people are like on Twitch are people with like 5, 10 viewers. So don't compare yourself to the big guys.
Yeah, and that's true of anything in life, right? Never compare yourself to the big
Yeah.
guys. Um, and when you were on stream and when you started it, did you just trade your personal account and just be like, right, here's what's happening today? Did you do anything like I'm going to try pass a prop, I'm going to try make 10K, or like any gimmicks like that, or you were just like, right, I'm tuning in, this is me for my day, and let's see what happens?
I tried everything. I tried trading with the my own capital. I tried to do propium challenges, regular challenges as well. I tried to take a trade, to force a trade during every stream to entertain the audience. but it was not really me. And I think if you don't doing something that you like and something natural, I think it's not going to work. So I just decided to be like, I will do just whatever I want. If today I feel like taking a trade on a prop firm with people, I will. If I don't feel like taking a trade, I'm not gonna force anything. I don't need that. So yeah, I just try to stay natural. And as I said, if I don't take a trade, if there is no opportunity, then I will find other ways to have fun with the community. So we'll talk about whatever. We'll crack jokes. We'll have fun. Or we'll talk about macroeconomics and try to make prediction instead of just looking at candles not moving or barely moving.
Oh man, cool. That's good advice. Thank you very much. Right, I'm going to say it's been about 15 minutes now, and I don't want your rabbit to starve, so I'll wrap it up here, and you can get to the football as well, because I'm going to go watch it too.
Sure.
But thanks, man. Thanks for coming on. It's been really, really insightful, and I really enjoyed talking to you, mate. And I hope we can do this again in the future.
Same, with great pleasure. Maybe on my channel next time,
Yeah,
so I
sure,
can
man.
introduce you to my audience. That was good. That was very good. Thank you so much for having me as a guest, and hopefully the audience enjoyed as well.
I'm sure they
Thank you,
will.
Matt.
Absolutely. All right, guys. Thank you very much.